Hello, are you here?
Yes, I'm here.
Okay, so yeah, so what I was saying before is a downtrend. You join the highs like this, a high to another high to another high to another high, a major highs in there together to form what we call a trend line. So this is for the case of a downtrend. Now for an uptrend, let me switch back to the 4-hour time frame. So now an uptrend would be the reverse of what we just saw for the downtrend. So let me look for a clear uptrend. This market for the most part of the time seems to have been going up for a very long time. Sorry, to have been going down for a very long time. Okay, so this is an obvious uptrend. Let me draw this for you to see. Market move from a low to a high point. Yep. Then move from this high to a low. This low now is higher than this previous low. So then again the market moves from there to a high. Okay. Again downwards and then upwards, downwards. All right. Are you with me? Hello?
Yes, please.
Okay, so now this is the structure of an uptrend, which is opposite of what we did for the downtrend. Similarly, you will also see another minor trend in between the trends. So I'm going to just highlight this one for you. I know you are not seeing it well. I will zoom it so you can see. Let me zoom it a little. Okay. So this is the structure of the uptrend I just mentioned. So this area now is, there are other trends in between this area as well. So I want to show it to you by going to a lower time frame. Okay. So now it's obvious now. The market moved from here. I'll use red color also, please. Let me use red color. Look, I can't see the color I was using. So the market moved from here like this, okay? Are you seeing it? So there is another uptrend now inside that uptrend we've done before. So once you notice market is creating structures of uptrend, what you now do is you come down to a lower time frame and find a place to join. Now let me make it more interesting for you. Look at where I am here, this way, here my cursor is. I'll draw down like this, go up, draw down, go up, draw down, up, down. That's a downtrend in between the trends. Okay, so we have this one at the top here. Look at the top, this one, okay? Are you seeing this? Then the market kept moving. So you will see trends in between trends, trends in between trends. That's where the market moves, right? So now this particular uptrend that is here was formed in between another uptrend in a bigger picture. But meanwhile, there is this particular movement downwards is called a retracement. I didn't mention that before. When the market takes a move up like this, once it goes up like this, it must always retrace back like this. That movement backward is called retracement. It's called retracement. So what am I trying to say? This, let me highlight it with something else. This part is called a retracement. For the bigger time frame, it's called a retracement. So all of these ones are called retracement. This one, this one, this one. So for an uptrend, all those smaller movement that comes down to create a low, they are called retracement. Similarly, for a downtrend, the one we looked before, all the other small movement that moves up to create a lower high, they are all called retracement as well. Some people call it retracement, sorry, I'm spelling it now, retracement or pullback. So all of these boxes, these areas I drew boxes, they are called retracement or pullbacks. That's what they call them. So now let me make it more clear. Let me clear all of these drawings. Okay, let me remove all these lines as well.
Hello.
Okay, I can hear you.
Hello, sir.
I can hear you.
Please, can you explain that retracement again?
Okay, let me explain retracement for you. When the market moves from a low to a high, it will come down to create another low. This movement downwards is called a retracement before it will move again, and then it will come down. I didn't mention this before when I was explaining. So this movement downwards are called retracements. All these movement downwards are called retracements. So why these movement upwards are called impulse. They are called impulse. All these movement upwards, they are called impulse. So I spelled it before. I said this is called retracement. So then this area is called impulse. Impulse. So that's how they call them. So we have a retracement and impulse in a trend. So if the trend is going up or down, it's like this. So sometimes you'll see the impulse will be very long, sometimes it will not be long. Just like in this case, you can see that the one for this one, the one for this one, this particular area, I just drew the line now, this area. You can see that it's longer than the one between here and here. Are you seeing it? So it does not mean the name is the same. It's all impulse. Are you getting me? So the ones that are moving in the direction of the trend are regarded as impulse, while the ones that are pulling back from the direction of the trend is called retracement. For every movement upwards, there will always be a pullback. It is that pullback that grants you the opportunity to join the buy. So I will clean all this and explain what I just said now. For example, the market moved from this low here now. Are you seeing this low? I just put these arrows. Market moved from this low now and moved upwards, then pulled back, then moved up again. As a trader, you will not just enter the buy instantly when the market is going up like this. No, you wait for it to pull back again to another level, a previous level, a previous price level. We allow it to pull back to a previous price level. So when the market pulls back to that previous price level, it's going to buy again. It's going to buy again. I see. So this is where you enter your buy. This area. This is where you enter your buy. This area like this. This is where you enter the buy. Okay. So then when the market moves up in this manner again, it's going to pull back. It will come back again. When it comes back, it will still come back to another level that you know before, a previous level. All right, so the market will pull back again to a known level, right? So then it goes up. There's a small pullback here. You are not seeing it. If you go to a lower time frame, you will see very clearly. There's a pullback here. Then what it did, we pull back to another known level. So whatever you do as a trader is, once the market is going up, you don't just join the market to buy instantly. You wait for it to pull back. Wait for it to pull back to these levels, previous levels, for you to join the buy. So what I would have done as a trader was, I know that the market was having a short-term down movement like this, Then all of a sudden, it created lows that are equal. Wow, I know that something is about to happen. It's about to continue up. So then it moved up. When it moved up, it broke this high that was here before. Merely broke this high. I will not be in a hurry. I will still be waiting. I will not be in a hurry. So it comes back to the high that it broke here, and then it starts going up in this manner. So what I will do as a trader is I will observe another high that it just broke, which is this one. So now it has broken this particular high that is here. Let me use a circle to hold it. Now it has broken this high that is here. I'm waiting for the market to come back to that level, and here will now be the place I will join. So this particular one at the bottom here, I will not join it because I need to confirm that okay, the trend is going up. So once I see an equal low in this manner created, and as the market was going down from here, then an equal low was created, meaning this low is no longer lower than this one. That means the downtrend is about changing, it has paused. So this little downtrend or pullback has ended, then I will join. So that's how you trade a trend, right? So this same thing now, the reverse is the case for a downtrend. Any question? Okay, you said you understand. All right. So that is the way it is. That's the way it is. So even if you want to trade a downtrend, it will still follow the same procedure of always coming back to its previous price level. When market creates an equal high in this manner, then it's about to go down. It's about to go down, and it went down in this manner. So what you do once it breaks this place, you look for the price to come back, to pull back to it, and you sell it downwards. The same thing you do for an uptrend. Once it creates an equal low, you know it's about to go up. So, and you can also see a bullish engulfing here. Let me clear everything so that you can see. You can see that there is a bullish engulfing here, though it's not the perfect type, but it is there. So that tells you the market is about to buy. So once the buy takes place, you only need to look for a place to join it. That's how you trade. So the strategy I'm going to teach you is how to use this bullish engulfing, bearish engulfing to find a place to join a trend. And the name some other persons call it is supply and demand. Some also call it order blocks. It's very simple. Once you can learn this, you have learned something that you can use to make money. Remember, we're analyzing a trend inside another trend. Initially, in the 4-hour time frame, we saw an uptrend. This is the trend. This is the trend we saw on a bigger time frame the other time, right? That was the trend we saw. So we have been analyzing this area where I draw the blue box on a lower time frame. Are you seeing it? So this is the area we've been analyzing ever since. So the market is still an uptrend. You shouldn't sell in an uptrend. You should not sell in an uptrend. Okay, so basically this is what trend is. Now let's look at trend line. Let me clear all of this for the uptrend. Yeah, now for the uptrend, a trend line is drawn using the lows. So you join the lows together. That is an uptrend. For a downtrend, you join the highs. I showed it to you before. Don't know if I can quickly get there. Okay, you join it using the highs. Whereas for a downtrend, for an uptrend, you join it using the lows. The lows. Okay, so that's how you draw a trend line for an uptrend. Now the last scenario I want to show you before we end this class is a choppy, a ranging, or a consolidating market. Some also call it a channel, a trading channel. It's all the same. So some call it a trading channel. Now for this type of market, it will have equal highs and equal lows. Equal highs and equal lows. This is not a perfect scenario, but I'm just using this so that you understand it. So this is a sideways market. I try to reduce the zoom so that you can see it more clearly. So this is the market I just drew. This is a sideways market. And what did you see? When the sideways market was done, the market just moved down to break it. The market broke it at this level, broke it downwards, and it continued selling. Are you seeing it? Continued selling downwards. So when the price breaks a range downwards, it will sell. If it breaks it upwards, it will buy. Is that clear? So this particular third one did not come to it exactly. This third one did not come to it exactly. So we can actually use a zone instead of a line. We can use a zone to draw them. So we use zone for mitigating against losses, so that we don't trade with lines, we trade with boxes, we trade with zones. So this is how it is drawn, up and down. So the bottom part is what they call demand zone, while the upper part is what they call supply zone. So when we get to supply and demand, I'm going to teach you all on this. So, but this is an example of a ranging market. So and what do you see? Market moves from a low to a high, then it comes from that high down to a low, then it goes back up again to that same high, then it comes down again, but this third time it broke it, so it didn't go back up, so it broke it. So this is how the market moves. All right, there are smaller movements in between, but I'm just drawing the major ones for your eyes to see. So when we start explaining our strategy properly later, you now begin to see all the trends that are in between each other. That's where you take your money. Okay, that's where you take your money. So with this said and done, we are done with, I can still see it here, sir. I can see equal highs here, right? This is another one now, and another equal high here. Are you seeing it? Equal low, rather, equal lows. So there is a zone here, and there is a zone here. So this is also another ranging market. So immediately the market broke it, get going down. So that is how the trend moves, as it moves. So if I get you well, you understand this. So with this, we've talked about trends. So later on, we're still going to talk about them again. All right, thank you for tonight. Please watch the video, understand, and also if you have questions, drop them on